Hey traders, Mark here from Trade and Train. It is Saturday morning, 9:44 here in the UK. Just going to run through the market, a quick recap for you all to have a look at certain positions that occurred throughout the week and then what we can potentially look forward to in the coming week. So what was the major news announcements through last week? Well, let's take a look at Forex Factory. You can see that it was very limited on major news announcements. Probably the biggest drivers throughout the week were Fed Chair Powell speaking on Thursday at 5 p.m. here UK time. Basically, he didn't help the market with raising 10-year yields, and the questions that were asked in terms of were they going to be more accommodative, were they thinking about tapering anytime soon, and basically there was no twist, there was nothing extra from him. He was just talking about how they will keep asset purchases at the current level and they have the tools in the box should inflation overheat. But that's what they're looking for. They want inflation to spark above 2%, and apparently if it gets too hot to handle, they have the tools necessary to bring the economy back in check. But what we've seen is US dollar exploding higher. We had the budget out of the UK on Wednesday. Didn't really see a huge impact from the budget on Wednesday, and then Friday we saw big employment change in the US coming in at nearly 180,000 higher than expected, and then also on top of that, it's not listed in here, but we had trade surplus from Australia, the biggest ever trade surplus in history. So that's just an indication of what's happening in the markets and what could be driving the markets in certain places. But obviously OPEC has seen oil soar to $69 at one point yesterday. They're keeping production levels pretty much the same. I think only Russia is the exception. So if we look at the dollar index, remember the dollar index is a basket of currencies versus the US dollar. It is weighted more favorably to the euro and the Swiss franc, being inversely correlated, and then on the back of that the next heavily weighted market will be the Japanese yen and then sterling. So it is kind of an unfair chart to look at in terms of the broader spectrum of the US dollar. You'd probably want to look at something that would weigh each market equally, but in general terms this will be sufficient and you'll get an idea of what's happening with the US dollar from the dollar index. Now what we can see is a couple of areas that were of major interest to us last week, which was the 91.6 level and then the next level, which was around 92, and you can see that last week this big bullish candle breached the first level and now it tested the second point that was interesting, which is this previous swing low over here of August 2020. The closing price. The tip of the wick, you can see this is where we had the previous test back here in February of this year, where the market sold off. Now based on what we're seeing here, we've obviously seen a huge bullish candle the last 2 weeks on the dollar, which has seen it rally from just low 89s up into 92. The question is, are we going to break through 92? And if we do, we're probably going to see a move up towards 94.5. Now this key zone where we're currently sitting here around 92, if I move down to the daily chart, what I'm going to look at is this potential flag pattern channel that's forming. Now things to consider will be how the market is going to move in and around this area here. So if I just start drawing on the chart for you, so this area here, we could potentially see the US dollar pull back down in here, or we're going to see the market move aggressively to the upside. Now something that will be a key driver here will be what's happening with the US 10-year yields. The yields have been on a significant move upwards, and obviously this is what's driving now dollar inflationary expectations, and that's what the market is trying to, whether they're trying to force the Fed's hand, who knows. But what we can see is, all we can do is we can trade what we see. So don't go and jump into anything too soon. So by that I'm talking let's see what happens at 92 on the open on Sunday and through Monday morning before the US jumps in. We could also be looking for potential short opportunities under 91.57, and that would be a rotation back lower into 90 before we get the next move higher. Now, my preference based on what we're seeing with yields and bonds and the dollar index is actually, I think we're going to see a break higher, but rather than just jumping into the can and continue to keep buying US dollar, I'm going to wait to see what happens with 92, and then what we'll look for is price to break up, find some nice support, and we'll trade that higher in towards that 94 even handle. Now, how do we look at that in terms of other charts? Well, let's go across to euro dollar, and because we're on the higher time frame, let's continue with that higher time frame analysis. So if we go back to where this rising wedge started, we can see that we've got nice structure support here at 1.19, which the market is testing. So that correlates beautifully with the dollar index level at 92. So from here, we're either going to see a nice break below, and then we can look for retests of 1.19 and trade that down into at least 1.16. So there's a good 300 pips potential up for grabs here, and it does form lovely with what we're seeing here in terms of a rising wedge formation, because the rising wedge, you would expect to see the market, well, if it does break out of that, you would expect to see it correct. And if we look left, there's some nice structure in here, and then we could potentially look for that move towards middle of the year when we see dollar weakness in the latter parts of the first half of the year, based on seasonal formations, that is. So watching to see what happens with this key structure barrier here. If we get a nice breakthrough, then we can trade that lower, and we should see some nice pips down to at least 1.16, and potentially a retest of the longer term trend line down here and structure highs. So obviously don't just jump short into this market. This is where trading plans and risk management come into prevalence. You've got to start trading like it's a business. Don't just jump into the market and think, oh, okay, well, you've seen some YouTube guru that's going to say, oh, euro's heading to 1.16, and this is basically what happens and why retail traders blow up their accounts so quickly. You've got to be disciplined. You've got to sit on the sidelines, wait for the markets to come to you. Don't you go rushing to the markets. It's a lot easier said than done, and you see these big candles and it's easy to follow them, and you see someone on Instagram or YouTube saying, oh, we've just done this or we've just done that. If they've done it, you've missed the boat. So just wait for the opportunity, wait for price to break, wait for price to test structure, and then see how the market moves from that point. So there's going to be some really nice trading opportunities and some key structure points here. We're going to go over to dollar Swiss, because dollar Swiss has probably, or not dollar Swiss, but Swiss has been the weakest market out there alongside Japanese yen. So if you are looking to trade markets, please make sure you understand which markets are strong and which markets are weak. The yen and the Swiss franc have been the two weakest currencies in the market now for the last couple of weeks. So if you are trading these, then fantastic, but make sure you're selling them. Where we currently sit, again, like the euro, this could be coming into an area where the market takes a pause and pulls back into that 92 level before we go again. So don't be surprised if we do get a correction, because we have literally just gone from 89 to 93 in a straight line in 2 weeks. So I'm not saying that it's due a correction. In my opinion, it is, but we've seen markets that can accelerate and just keep going a lot longer than we anticipate. So wait for price action to give you a clue that the market is going to turn. So what would we be looking for? Well, let's just drop down and see what we can see on the smaller time frames. All I've done is just gone down to the 4 hour. We can see down at the 4 hour price at 93. We consolidated. We had 12 hours of basically inside candles, followed by a shooting star, followed by a hammer candle, followed by a bullish engulfing candle, followed by an inside candle. If that doesn't tell you that the market is very indecisive at this point, nothing will. So you're going to have to sit tight. You need to see the market give you some clue as to which way it's likely to go. And if we look at this, underneath the bullish engulfing candle, which was around non-farm payroll, 92.50, that's only leaving you a 50 point reward available right down until this place here. So I think I'd be sitting tight, and if price does pull back to 92 and you can see the market momentum fading, then it's going to be a nice place to, or a nice opportunity to buy. Cable, on the other hand, you know, this has played out pretty fantastically well from 142s, but I don't think anyone would have just been trading short from this point. Even though it came into a nice structure point, anyone that would just traded short in here was literally just trading off the level, and you know, I think that's a very quick way to start losing accounts if you just trade off levels without actually seeing how price reacts when it comes into that zone. So last week we saw that lovely shooting star coming off resistance, and we forecasted in our watch list that we would expect to see some further downside on this market. Now we did test 137.50s, 137.60s. I would still be looking to see this market come down and test this trend line support. Whether we do it in a straight line or not is to be seen, but I think we'll be heading a little bit lower before we get potentially the next impulse higher. The UK have announced furlough to extend until the end of September, so obviously we're not going to see the full impact of unemployment and redundancies of the labour force, because the stats show from the ONS that there's one in 5 people on furlough in the UK now, so that's 20% of the labour force on furlough. And you know, the big question that we all ask ourselves is, at the end of furlough, what's going to happen to those 20% of employees? Are they going to be re-employed by their organisations, or the organisations realising that they can actually cope? And if so, we're going to have a major unemployment issue on our hands here in the UK, which then could obviously lead to recession, whatever. So these are just things to be wary of. I know the government is doing everything in its power to try and avoid that situation, but who knows what can happen. All I can say is trade what we see, and what we see right now is a weekly correction, and I'll be looking for more bearish opportunities on rallies. So if we just zoom in into what actually happened, for those of you that follow us on social media, and especially Instagram, you'll have seen we posted in our stories a couple of trades this week that you should have all made significant amount of pips out of. So the first one was this short from here. We got a nice false break on the hourly chart, and it was around here we go, just before Jerome Powell spoke. Basically we saw the market come in, and if we just look at the way price action came up into this level, we got a nice move up, and then here it looked like the market was stalling and false breaking. We just put a sell stop in underneath this hourly candle. Market came down, hit first take profit within the hour. That was lovely, thank you very much. A little bit of an additional profit with the extra 20% we left on the trade, and we came out. So that was a lovely trade that we sent out. We put that in Instagram in our stories prior to it actually happening. So for those of you that actually follow us on Instagram, please make sure, I hope you took it, and if you didn't, Instagram, we're on at the Live Traders Club. I will put that on the chart for you, so you can follow us for any other free trades we send out there. Let's move over to Aussie dollar, because we actually sent out a free trade on Aussie dollar for you yesterday as well, which you should have taken a nice 1% out of before market close. So well done to all of you that did. Now what are we seeing with Aussie dollar and basically how the market has reacted? Well, we saw price test 7,800 even handle. The market broke a lot higher, and then we were going to look for potential buying opportunities on a retest of 78. Market dynamics shifted significantly last week as 10-year yields moved significantly higher, and you know, it gave us an opportunity to think, right, okay, if that's the case, that's going to put pressure on stocks, and therefore we want to be maybe using this area of interest to then trade short and back down into weekly support around that 76 even handle. So we actually took a trade short in here, and let's just pull this out. This is one that in fact we sent 2 last week, and again this is very similar to the pound one. You can see what happened. We had support. Let's just draw this in so you can see it nice and clearly. We got price testing here, testing, finally breaks through, we rejected, put in a lower low, we rejected again, moved lower, came up. On this point here, yields were actually spiking. They were coming up to 1.55, and through this period we actually saw them test 1.6s. So a similar trade to sterling, which was a sell stop underneath there, but we held this one. We only closed this one out early on Friday morning, so we got some really nice pips out of this, about 3%. And then the next trade we sent out was on this zone here. So we saw the market come back up into this zone here. It gave us a nice 15-minute rotation into a evening star formation, sold off, and at, I think we had a 35 points, 45 points we were up at this point. I posted out on Instagram. If you're in this trade now, choose your medicine. We're 1% up. At 1% up, you can bank the profits or be risk free. So either way, whatever your choice was, well done if you took the trade. If you didn't take the trade, maybe you'll watch out for more opportunities we post. So in order to do that, all you need to do is turn on notifications on Instagram, and you'll be able to see whenever we post up any charts, free trades for you to take. Last chart I'm going to take a look at will be gold. So what are we expecting with gold? Well, gold is a very, very interesting chart at the moment, because gold is actually being driven by bonds. Now bonds are basically collapsing, but on the back of, let me just say, this was from our watch list sent out to members last week, so I'll just remove this so it's not getting in your way. So something to take note of is how price is reacting and following this formation here. Now if we look, and I'll bring in the bond chart in a minute, and you'll see bonds are just falling off a cliff, and gold has a tendency to follow how bonds move. Now we are coming into a period where we'll probably get something like this from bonds or from gold. You know, they'll follow. So don't be surprised if we get a little bit of a move up and a little bit of move sideways before one further move lower throughout the course of the year, and then we'll start looking for that seasonal period towards November to start getting long on gold, and maybe where 2022 is the year for gold. But let's take a look at that right now. So opportunity where we currently sit, yes, we're testing major support, trendline support. So could we potentially see this little correction we're talking about come from where we are? Well, we've got a falling wedge on a smaller time frame. We can see the market we went from momentum, the candle bodies are getting smaller, but remember that as candle bodies are getting smaller here, this is through US session, as the market participants are getting lower and lower coming into the weekend close. So that's kind of expected. Sunday open will be interesting. Will we gap lower? Will we gap higher? Will it stay flat? But I think a real nice trading opportunity, if we are going to continue the move lower, we'll be watching for price around 1760s, 1765 to 1760. If we can get a push up into this area, then we might see a real nice rotation lower from there. But again, don't just put sell limits in here and stops above here. That would be the wrong thing to do, because you know, when gold gets on a move, whether it's a bullish move or a bearish move, you can see that real strong move higher or a strong move lower. And I'm sure this move lower has really punished all those gold bulls this year. But you know, don't be surprised if it runs even lower. So this is my take on gold right now. I'm just going to pull in the weekly chart, and I'm going to flip this to a line chart and show you how the market is reacting in relation to bonds. And it is bonds that is leading gold. So let's just compare bonds right now. So I'm going to put bonds on a new price scale, and you'll see how similar they are. Now if we look at this, you can see bonds are in the orange, and you can see as bonds move higher, it pulls gold. As it goes sideways, gold goes sideways. As bonds move higher, it pulls gold. And here you can see bonds have led the move. You know, this is a common trait on how the markets move and which one is an instigator. Sometimes the correlation obviously does go out of whack, but predominantly what you'll see is right now bonds are dropping. Expect to see gold continue to fall unless we see bonds turn around. And if I just I'm gonna hide gold for now, 1 second. So if we just look at, just we look at bonds here and we start highlighting where the potential move is and what could we look for, well, if we just start focusing on this move here, potentially bonds, yes, we're at a structure point now around that 156, 157, so this is where we could potentially see a little bit of a push higher, something like this, and then a move lower. So it would be this where I would expect to see when bonds push up from this trend line. If we can pull down into this trend line, this is where I would expect to see the gold bull move start. And you know, if we then look at where can it go and forecasting, we can see how the market operates nicely within this channel, and it's just a rotation, it's a cyclical move. So don't be surprised if we see bonds push a little bit lower into the 150 even handle. If bonds come into the 150, this could be your cue sign to start looking for potential longs on gold. But right now we've got structure where we currently sit. You can see my alert that is sat here. So that's the orange dashed line. My alert sat here. If we see these roll over, we might get that push higher on bonds up into previous highs over here, about 165 and 165. That may correlate, and watch that closely with gold and see where we sit with gold in terms of, is it going to be the 1765 or is it going to be the, I'm just going to bring my drawings back in if it will permit. There we go, and I'll bring gold back. So let's just take a look at those potential correlations that I was just referring to. Oops. So that move higher on gold, we could be watching 1765, but if it breaks through this, next move will be around that 1800 for that rotation lower, and then setting up for the move. But again, follow bonds, see where they get. When bonds get to about 150, be interesting to see if they can hold or will they continue to drop lower, and this will be our cue to decide on long-term move for gold next. Okay guys, well listen, if you've enjoyed the content today and you would like to see more content of this nature, please just hit like, share and subscribe. If you've got any comments, put those in the chat box below, and you know, whether that's regarding any charts, any content you would like, you know, whether that's on here, Instagram, please just let us know. We're happy to produce content for all our followers. And you know, if you are looking to get started with trading but not exactly where to start, we do host free clinics most Tuesdays at 6 PM UK time, and I'll put a link for the next one in the comment section below. Have a great weekend everyone, and we look forward to seeing you in the markets next week. Bye bye.